if you bundle those together, it looks like things are flashing yellow, maybe even red. And as somebody who pays particular attention to the growth in the money supply and how that affects the economy, I'm a little bit in the skeptical zone. I play the long game. I don't get too excited about 1 week's data or 1 quarter's data. They jump around and they do get revised, as your report excellently portrayed the situation that we're facing. But I think the thing that was missed in that overview was the first half. The first quarter was mentioned in the overview, but if you put that essential zero growth together with this revised 3.3, it doesn't amount to too much. And I think due to the fact that the money supply has in fact been on a slow path, it's actually contracted for about 2.5 years, that we will see a continued slowdown in the economy. And added to that, tariffs were mentioned, and we're really, with average effective tariff rates now, at almost as high as they were in the 1930s with the Smoot-Hawley tariff. And that Smoot-Hawley tariff, we all know, that put a dagger in the heart of the economy and put the Great Depression on a long duration.
Yeah, I want to talk a bit more about what you're getting into right now, because GDP, as you mentioned, dipped in the first quarter of the year because of all the imports, people trying to get ahead of these punishing tariffs. And it was the first retreat in numbers in 3 years. Let's talk more about the potential for these kind of fluctuations.
I think we're going to see a lot of fluctuations and a lot of revisions. And part of that is due to the fact that the quality of the economic data that we've been receiving in the United States, it has been on a downward trend with lower and lower quality over time for a whole variety of reasons. But as a result of that, the initial estimates come out, and then as time goes on, we receive further improved data and more accurate data about what actually happened.
Right.
And then we have revisions. So there are more and more revisions and generally lower quality. So you can expect, back, Sean, to your point, continued fluctuations, revisions, and less reliable data.
Yeah, I want to talk about that specifically because we have an important jobs figure out next week. I'm curious, A, what you're looking for, and we have to kind of take stock of where we are now. Trump's hand-chosen team that he just picked recently, they will be interpreting these figures, and that comes after the president, for lack of a better term, had a fit over recent negative employment numbers.
Well, I think we have to be very clear about how the system works with the employment numbers. That they have a defined methodology or template, if you will, and they have professional bureaucrats running the thing. And as a result of that, the template and the bureaucrats spit out the numbers. It's not something you interpret and manipulate. That's just not the way it works.
Yeah.
However, due to the fact that the responses to the surveys they put out about employment, the response rate's gone way down over time. It's gone down, down, down. It's a bipartisan thing. It has nothing to do with political parties whatsoever.
Absolutely.
So the quality keeps going down, Sean, and as a result, again, you have revisions in these initial numbers, because to get the initial numbers, the bureaucrats have to use models and make estimates about how to fill in the holes.
Yeah.
And by the way, they're doing this in a professional way. This is not a political.
The same thing happened to the Biden administration and to the administration before that. But
absolutely.
So I'm curious how you think tariffs are affecting the economy now and will affect the economy. To hear Trump and he is right, billions of dollars of tariff money is rolling in, but there is massive concern that there is going to be a downside at some point, perhaps in the very near future.
Well, I think I'm on the downside part of that story. Now, the editor of Fortune and myself, Sean Tully, wrote an article earlier this week in which we laid out a couple of points that people are confused about. Tariffs are sales taxes on imports coming into the United States, and those sales taxes are paid by Americans, not foreigners. Forget that foreigners pay the tariffs. Americans pay the tariffs, and they're effectively sales tax on imports. Now, it turns out, you mentioned the money rolling in. The money is rolling in, by the way. And Tully and I make the point that if you look at all the estimates that are being done, the money coming in is going to effectively be a huge tax increase on Americans that will effectively take about half of the tax cuts in the big, beautiful bill that everyone was raving about, particularly the president. And about half of those are going to be taken away because of the taxes on tariffs.